and it's just shy of 500 million actually of assets now. So it's probably been one of our most successful asset gatherers in the last couple of months. And the performance, I think it actually hit an all-time high performance. I think it's around about £10 a share now. So still some value there.
Hello, you're watching Proactive. I'm joined by HANetf co-founder and co-CEO Hector McNeil. Hector, always good to speak to you, and lots of recent news out that highlights the potential of your exchange-traded products. So maybe starting with the news that the Royal Mint is starting a new e-waste recycling business.
Yeah, nice to see you again, Stephen. Yeah, no, it's pretty interesting. The Royal Mint has a very broad, sustainable remit in its business. It's 100% owned by the UK Treasury, of course, but it's a largely woman-led board. It's a attempt to be sustainable from an energy perspective. So they've got their own wind power generation, their own solar power generation. It's around about a 50-acre site. It's essentially a sort of high-tech factory. And recently they've had a stated aim to try to use as much recycled gold and precious metals as possible in their production of coins and jewelry, etc. In fact, they launched a whole range of jewelry called 886, which is actually the date that the Royal Mint was incorporated by Alfred the Great. So the brand is 886 and it's fully recycled precious metals. Yeah, they had a stated intention of creating an e-waste business to mine, mobile phones and circuit boards, etc. Which is packed full of precious metals, and then reuse those. And the rationale really is obviously, those metals are highly valuable, but also from a carbon footprint that recycled gold tends to be about 95% less carbon intensive than mined gold. So it's very, very very focused on that sort of sustainable world, and then take that into what we're involved with the Royal Mint with is the Royal Mint physically backed responsibly sourced gold RMAU. That is actually 100% backed by good delivery bars under the LBMA standard that meet the post 2019 responsible sourcing standards. That's all sort of UN goals and anti-slavery and all those types of things, and obviously responsible mining and such like. But actually, we go one step further in that product, and over 50% of the bars are from these recycled sources. So, it's almost unique from that perspective. And essentially what happens is, as part of their production business, the manufacturing, the Royal Mint actually has a scrap offtake off gold. And then we take that recycled gold, it's fully verified where it's come from, and then we turn it into good delivery bars, send it to a refiner to be done. So that's what actually backs RMAU. So I think we're about 54% at the moment, but the aim is to be around about 50% from recycled gold sources. So yeah, no, it's great to see, from my perspective, very proud of the Royal Mint. Isaac Newton was the CEO there for 20 plus years, invented the first modern coin with serrated edges. Obviously that institution is, I think it's the seventh oldest company in the world. It's survived the bubonic plague, world wars, the Norman conquest, civil war. So it's got this, fantastic purpose built. One of the most secure vaults in the world in the Welsh countryside. One road on, one road off in Llantrisant. So in terms of gold ETFs, it's almost unique from that perspective. So it's a fantastic. And actually, just as a tip for the audience, if you're looking for something to do in the summer, they have a great exhibition centre where you can see the whole history of coins and manufacturing. I mean, they still make 6 billion coins a year for 60 countries around the world. Actually, Stephen, it's quite a formidable business, actually.
Well, maybe moving on to another of your ETFs, and this kind of come of its own, and that's the tech Megatrend UCITS ETF. It's an equal weighted ETF. And I suppose with the recent volatility in markets, and particularly for the big seven, the magnificent seven tech stocks, it really shows the power of equal weighted ETFs.
Yeah, I think you're exactly right. I mean, what's really nice about the markets at the moment is everybody's been waiting for that inflection point when you need to broaden out past that sort of concentration risk in the Mag 7. I mean, I actually do often say companies like Amazon are like ETFs in themselves because they obviously have, thousands and hundreds of thousands of companies underneath them, and you get a lot of exposure in different things. But you've got a hell of a concentration risk. So if you buy something like the Nasdaq 100, you're probably buying 60% exposure to the Mag 7, right? So maybe even more sometimes. But with something like the ITEK fund, you're actually getting exposure to an equal weighted process. So you're a lot more diversified. You're less exposed. So in that product, I think it's about 120 stocks. There's the Mag 7 are probably less than 5% of the exposure in the whole thing, and the largest stock is probably about 2 to 3%. But where it's quite unique actually is it equal weights in two ways. It equal weights across the actual megatrends themselves. So it covers robotics, automation, cloud computing, big data, cybersecurity, future cars, genomics, social media, blockchain, and digital entertainment. So you get all of those megatrends. It equal weights across those at the rebalance, and then underneath that, it equal weights the securities underneath. So it's almost a unique double equal weighting. And we're seeing quite a few clients moving into that from the sort of market capitalization, sort of Nasdaq 100s or S&P technology or those types of exposures into this sort of more broader play. So, what I'm sort of seeing from investors at the moment is they're probably keeping a core in that sort of Nasdaq 100 exposure, but maybe taking 25% off the table and putting it into something like ITEK, which is, I say, pretty unique from that perspective. So it's a really, really interesting trade at the moment, that, Stephen.
Well, maybe moving from market volatility to political volatility, Hector, and we've had Ukraine turning the tables a little bit and invading Russia. And I suppose this is where your future of defense ETF NATO comes into play.
Yeah, I mean, how incredible is that? I mean, I think we all woke up, with complete surprise, and whether the NATO members are to be, believed or not, particularly the UK and European countries and the US, that they didn't see this coming. I'm not quite sure I buy that, but to see Ukrainian, and British Challenger tanks, right, going into Russia and making massive gains, I think is really interesting, and I think it completely outlines the strategy around hopefully we're going to see a truce and a peace process there. I think it becomes part of the bargaining chips for Ukraine to sort of say, well, actually, if you want to hang on to Donbass, we have this land, let's have a trade-off. So I think it massively improves the hand that Ukraine will have in those discussions. And it's, let's be frank, it's a massive embarrassment to Putin and his cronies as well, to see, how easily that invasion and how they're holding the land. I mean, you would have expected them to be absolutely obliterated by now if Russia had any cohesive military in place. So I think that's really really quite important. And obviously, that sort of goes hand in hand with the support that the West is giving and the military that's buying. We've seen the F-16s arrive there now. As I mentioned, we've got the Challenger tanks there. Rheinmetall, they've got a plant there that's repairing the Leopard tanks. They're talking about having a actual production facility in Ukraine. And what was amazing, seeing the news where they uncovered the plot to murder the CEO of Rheinmetall from the Russians. We're seeing expenditure massively ramp up in the NATO countries. To the point where I think 23 out of the 32 now are meeting the 2% plus targets on GDP. I mean, adding Sweden and Finland, they're already at nearly 3% each. Those two countries, and it's only going one way. And what's been really interesting as well, you've seen the collapse of Russian exports in military, but you've seen France move up to number 2 in the table for military exports. And as NATO is quite unique on the basis that it only includes companies that are in NATO countries or NATO affiliates. So it's got that sort of defensive alliance. I call it sort of almost like a soft ESG screen to sort of say, well, you're not going to be getting involved in, potentially offensive military campaigns, which obviously is what you're seeing in, with the threats of Russia and China, etc. And even, those sorts of guys who are in the middle ground, like India, etc. You will never get that in the NATO product. And also, it got voted the best ticker in the world last year, did NATO as well. So I think from that perspective, it's fantastic. and it's just shy of 500 million actually of assets now. So it's probably been one of our most successful asset gatherers in the last couple of months. And the performance, I think it actually hit an all-time high performance. I think it's around about £10 a share now. So still some value there, but it's at an all-time high. So I think that just reflects, that whole story. And what I always say to people as well, that things like gold, Bitcoin, defense stocks, you can't really ignore that in today's world, right? You've got to have that, either to have you protected against these sorts of geopolitical events, but actually just the returns that are coming in those spaces as well, are really, really pretty significant. And for those people that want to drill down a little bit more, there are some ESG screens around UN policies, etc., that sit inside that ETF. So I know it's a very sensitive area for people, is that sector, but I think we've tried to create as curated response to that as we possibly can.
Well, it'll be interesting to see how things develop over there. I'm sure we'll be chatting about it next time, Hector. Thank you very much for your time today.
Thanks very much, Stephen. Have a good weekend.
And you. That's HANetf co-founder and co-CEO Hector McNeil.